Well, thank you, Chamberlain. Well, good morning, good evening, wherever the world you might be watching from. It's a trading week which is winding down right now. So much has played out this week with a big rate hike from the MPC. Then tomorrow, we get some big data. GDP report for the first quarter of 2024. But first, let's get to the top stories that set your agenda. Starting with the oil market, oil prices eased for a fourth straight day today on worries that U.S. borrowing costs could be hiked again if inflation surged. And we've seen that reflected there with the numbers, $81.63 a barrel for Brent crude, down about 0.3%. The U.S. version, WTI crude, that's $77.14 a barrel, moving away from that psychological level of $80 per barrel, 0.05%. Let's get a check on the FX market right here. The Naira appreciated against the U.S. dollar, 1,462 Naira at NAFEM. That was a close yesterday from 1,465 Naira, 0.21%. That's the gain. Then at NAFEX, 1,458 Naira. That was a close, still below that 1,500 Naira level, 1.40% increase. That's what we have there. So both gains there, but I know the BDC, that's saying a different number at this time. So some other stories now. We see the Central Bank of Nigeria has issued new guidelines for BDC operations after consulting with stakeholders. The updated rules, effective June the 3rd, requires existing BDCs to reapply for licenses. Other key changes include the removal of mandatory caution deposits of 200 million Naira for Tier 1 and 50 million Naira for Tier 2 licenses. The CBN has also eliminated the annual non-refundable renewal fees of 5 million Naira for Tier 1 and 1 million Naira for Tier 2 licenses. To other stories, the Rural Electrification Agency is partnering with Husk Energy in its bid to spread access to renewable energy to the rural parts of Nigeria. The partnership between REA and Husk Energy aims to establish a long-term strategic relationship that sets a global benchmark for scaling the deployment of decentralized solar power projects, otherwise known as mini-grids in Nigeria. The partnership focuses on the deployment of up to 250 megawatts of interconnected mini-grids, specifically targeting peri-urban and rural communities, including markets, businesses, households, public institutions, health clinics, and schools. And to some company news, the financial accounts of the Bank of Industry for December the 31st, 2023 shows an impressive financial performance with disbursements to large, small, and medium micro enterprises advancing credit amounting to about 496 million Naira. Speaking during the bank's 64th annual general meeting in Abuja, the chairman of the Shareholders Committee, Mr. Mohammed Bala, says the loans were targeted at 75,000 beneficiaries. Take a listen.
Nigeria's oldest and largest development financial institution, the Bank of Industry, is holding this 64th annual general meeting amidst recent developments in the global and domestic markets, which has pushed the bank into doing better. Shareholders and the management team of the bank are looking at the books to assess the performance of the bank in 2023. The bank takes pride in the fact that its intervention is yielding positive results, serving as a major backbone to the nation's industrial development agenda.
The bank disbursement profile in the year improved significantly as the bank disbursed the sum of 496.717 billion to 75,809 beneficiaries in 2023. This resulted in the creation of an estimated 2.193895 direct and indirect jobs.
Also, the bank's balance sheet has shown strong resilience. This is just as its profit before tax grew by over 117%.
I'm pleased to announce that the group's total asset grew by 64.6% from 2.37 trillion in 2022 to 3.91 trillion in 2023. Total assets increased by 64.6% from 2.37 trillion to 3.91 trillion between 2022 and 2023 respectively.
After the event, the managing director of the Bank of Industry shares his thoughts on why the bank has continued to stay on the path of growth, as well as its plan for the year 2024.
We intend to increase the amount of lending to the MSME sector. We are focused on thematic areas: youth and skills development, climate and sustainability, gender, digital economy, infrastructure development, and so on and so forth.
The management of the bank remains confident of an improved outlook in 2024, while promising to deliver on its mandate to strengthen the micro, small and medium enterprises.
Quick break now. All right, let's get a sense of how the local and global commodities market is faring, and it's still about the interest rates, with central bankers around the world being pushed to stay hawkish at this time. Let's talk to Mr. Bismarck Arani now, CEO of Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Laddie.
So we're still gauging market reactions to the latest interest rate hike here in Nigeria. So it seems for the CBN MPC, when it comes to rate hikes, it looks like it's damned if they do, damned if they don't.
Now let's. I'll take a three-dimensional approach to this analysis. One is what happened. Two is what is going to happen, and then three is what is likely to happen thereafter. So one, what happened? There was an aggressive hike. The market expected 100 basis points, but we saw 150 basis points. The emphasis and the guidance was that the primary goal of the central bank remains controlling inflation, and therefore the anchor being the nominal rate, which is the MPR, which now goes up to 26.25% per annum. Now, having done that, the expectation was very simple, that we were going to see the Naira appreciate. We're going to see corresponding increase in all the level of interest rates, both at the deposit level, the lending level, the commercial paper level, and all of that. What has happened so far is that the markets have been kind of tepid and have not moved that rapidly. So there has been no corresponding increase in interest rates so far, but that's coming. The Naira appreciated initially, as we saw, as you already alluded to, in the NAFEM and NAFEX market. But in the BDC market, we've seen that actually decline to 1,515 Naira to the dollar. Why is this happening? This is because, one, there are some structural issues. You had the BDCs having to reapply for their licenses and everything, new regulations. Anytime there are new regulations, people kind of become more skeptical about, one, whether the central bank is genuine about what they're going to do, and two, whether there's enough dollars in the market to meet the demand. So that being aside, so far, the impact on the economy is what we are going to talk about a little bit.
Right.
As you can see, the stock market actually has declined and will continue to decline. It's in bearish territory.
All right, Mr. Ronnie, I'm so sorry I have to interrupt you there, but we'll come back to the conversation right now. But we'll have to join a live coverage of launch of grant scheme advancing Delta at the Dome Event Center in Asaba. We're going to be joining that on DSTV, but Business Morning still on other platforms. All right, so Mr. Ronnie, please, you can conclude your thoughts now.
Now, what is happening is that we've seen the stock market actually go bearish right now, and we've seen that GDP numbers are coming out on Friday, which is tomorrow, and we expect that to be slightly lower than anticipated. On the other hand, we are beginning to see money supply growth begin to actually decline. So essentially, what is happening is that things are moving very slowly, but in the right direction, but very, very slowly. And so what are we going to see next? Now, I want us to look at the impact of this and what the likely impact will be on different categories of stakeholders in this economy. For the consumers, basically, the guys on the street, the survivors, there are some prices that have actually declined, and you can see that very clearly in the question of what has happened to eggs. We've seen that what has happened, eggs have come down quietly, and we've seen also, palm oil has declined by 9%, the prices. We've seen noodles fall by 3%, all this in the last month. And we've seen beans drop by almost 5%. And also we've seen sugar decline. But on the other hand, we've seen some prices actually increase. The prices that have increased are gari, which has gone up sharply by 66%. We've seen tomatoes gone up by 171%. We've seen bread up, bread flat. And then we've seen tuber of yam up 40%. What is this telling us? That there are different components in the inflation basket, and depending on how elastic or inelastic the demand is, we are seeing this. And also, we are seeing those things that have import content actually begin to show the price decline because of the exchange rate weakness. The exchange rate had appreciated earlier and had come back up. And you can see that the exchange rate actually went as high as 1915. Then it came down to 1,100, and now it's back up to about 1,500. So it tells you that the foreign exchange market, like every other market, is subject to the forces of demand and supply, 1, 2, the structure of the market, whether it's imperfect, and 3, regulatory interventions, which actually at times actually distort the equilibrium in that market.
Okay.
Yes, go ahead.
So, looking at, where we are now with inflation, and we saw some kind of deceleration, with the last number. We'll be looking forward to what happens in May, but we know inflation is still rising, at this point. Is it time for Nigeria to start, looking beyond monetary policy, in taming inflation?
Okay, let me answer that. Yes, inflation is increasing, but inflation measures the change in prices. And if you look at the inflation rate in the last 3 months, the rate at which the inflation rate has been deteriorating, let me use that word, increasing, has actually slowed. The change between 1 month and the other was as high as 1.5%. Now it's down to about almost 0.5%. So it means that the inflation is approaching the point of inflection. And if this trend continues, then you would see that inflation begins to actually begin to decelerate. 2, that month-on-month inflation has actually started declining, and that means that month-on-month is more reflective of current conditions than previous conditions. So if you look at annual inflation, shows a trend and it's slowing gradually. The month-on-month inflation, which is more current, is actually showing some deceleration. But beyond that, there's a question of core inflation. Core inflation shows when inflation is structural, when it is, you knock off seasonalities and all that. And we see that core inflation is still hard and still increasing. So it means that we still have some structural work to do. So what are the factors that are leading to this inflation mainly? 1, the exchange rate depreciation. 2, the uncertainty in the market. 3, security and logistics costs. 4, money supply growth. Even money supply growth is actually, which had gone all the way to about 75%, is now down to 69%. So if you look, when you put all of these factors together, it means that inflation is gradually being contained, but it's a long way from actually beginning to decline. We think the decline will come towards the end, second half of the year. Now, what are the challenges we have? 1 is the most important challenge is the minimum wage issue. You know that the federal government is offering 54 or 57,000 naira. The labor is asking for 615. It's now going to 500. There's such a wide gap between what is being demanded and what is being offered at this point in time. So if the minimum wage issue is badly managed, it could put inflation on a treacherous path. But I think those in charge of managing the fiscal policy will have to contain and deal with this minimum wage issue. It has been done before. We did it in 2019 successfully, so it can be done again this time. So that is my view on inflation containment at this point in time.
Right, and definitely, I know in other, developed economies, they try to measure the strength, of the average consumer. So from what you're seeing right now, how weak is the Nigerian consumer at this time?
Well, the Nigerian consumer has been battered. Let me put it this way. Between last year, May, and now, it's had to deal with higher petrol prices. It's had to deal with depreciating exchange rate. It's had to deal with higher costs. It's had to deal with new tariffs. It's had to deal with electricity tariffs. It's had to, and it's also had to deal with inconsistency in supply of all this basic and critical infrastructure. For example, I think that we're still struggling with 4,000 or less than 4,000 megawatts of power. Without power, you're not going to get out. We're dealing with security issues. We're dealing with bad roads. We're dealing with so many things. So the consumer is battered and is looking for evidence of hope. The hope, what is going to happen, something that will make him more, I wouldn't use the word resilient, something that would turn the situation around. But what are we seeing? You have the palliatives that are being offered are not being channeled properly, and palliatives are temporary relief. There's a much more fundamental structural things that need to be done to ensure that the consumer is going to be enjoying the dividends of his work, because he pays taxes and he also goes to work, so he needs to have some relief, generally speaking. So, and if you look at it, the income per capita, the income per head, both in Naira terms and dollar terms, is actually declining. So there's work to be done, and it's not easy. There's no silver bullet. But the one thing that is happening is that if you look at the price of diesel, Dangote refinery has enabled it. And that's a major, major boost for transportation costs, for electricity costs and others. So at 1,150, which is the price I got this morning for diesel, which had gone all the way to 1,700, there's at least a 29 to 30% reduction in the price of diesel. That kicks in and has a knock-on effect on so many other prices. So that's the good news. Two is that if the money supply growth is being managed because of higher interest rates, if you put those two together, we might begin to see inflation begin to moderate, obviously by August, September, provided that the minimum wage issue is managed properly.
Yeah, we'll definitely keep navigating and watching what happens with the minimum wage at this time. But let's get a quick check on the global oil market. We know how the oil prices, play into global inflation and, and with energy prices. So it seems Brent and WTI seem to be heading down. That's looking at prices at this time. Is that the trend we're seeing?
I think it's going to happen. Let me tell you why. Whatever is happening in Gaza, what's happening in Israel, what's happening there, shows that the likelihood there will be a truce, one. Two, that the U.S. government is interested in a ceasefire, and whatever is, if that happens and there's a de-escalation of violence and all of that in the Gulf area, we think that the price of oil comes down. Don't forget, the U.S. has an election in November. Even the UK has an election in July. Now, the key element in that election equation is that what is the price of petrol in the pump in the US? Right now, it's something close to $4.83 per gallon, which is almost $1.20 per liter. If you bring down the price of crude, let's say Brent, to about $75 a barrel, it hurts Nigeria, but it augurs well for the consumer in the United States and other parts of the advanced economies. So we see that conflict of interest, fundamental conflict of interest. The US is the world's largest producer of oil. So we think that it is in their interest to bring down prices. We think that it is in our interest that price of oil increases as long as we can benefit from it. So there's that, those contradictions that need to be resolved. But technically speaking, at $80 a barrel, Nigeria can get by. But when it starts dropping below $80 a barrel, it becomes very, very difficult. Nigeria is actually facing a major challenge of dollar inflows from oil and dollar inflows from the non-oil diaspora. So in the end, our currency, our revenues, GDP output to a large extent depends on what happens in the oil market. So
right.
At $80 a barrel, we can manage, but when it goes below that, it becomes really difficult for Nigeria.
And hopefully at some point, Nigeria's economy is set up in a way where when global oil prices come down, the economy stays strong, hopefully. But thank you. It was always great having your perspective, Mr. Bismarck Karani, CEO, Financial
Thank you, Daddy, for having me.
Thank you so much.
Thank you for having me. Thank you.
All right, we'll take a moment now. All right, time to head to the markets now. Talking about the fixed income market, we have Mr. Chuka Nwachukwu, Group Head, Balance Sheet Management at UBA. Great to have you on the show. Good morning.
Good morning, Larry.
Yeah, so we had that auction yesterday. How are the yields looking?
Well, the auction DMO offered over 508 billion. Stop rate on the longer end dropped by just 1 basis point. However, the other maturities, 91 days and 182 days, move between 26 basis points and 45 basis points. So the longer end of the curve, which is the 1 year, dropped by 1 basis point from 20.7 to 20.69. The most interesting thing about it is that with the tightness in liquidity in the system, we saw oversubscription of well over 1.5 trillion. So that also indicates that investors' appetite in our security is quite high. For today, we've seen this bill, the 1 year, for example, trading, about 50 basis points below the auction rate. This has actually also affected the yield curve on the bond side. We've seen bond 2049, 2050, the longer end of the curve trading above 18%. And so all this, it's what has played out in the market over the past 4 days.
Yeah, quite interesting. And we got that massive rate hike, 150 basis points by the MPC. When do we start feeling that in the fixed income market?
Can you please repeat the question?
The latest rate hike by the MPC, 150 basis points. When do you think we'll start to feel that in the fixed income market?
Oh yes. So the rate hike, if you watch, over the past 3 MPC meetings, we've seen rate hike of more than 700 basis points. The current one, like you rightly mentioned, 150. Basis point movement, has actually has affected the fixed income market, in the sense that we've seen youth moved from 14% about 14 months ago to about 22%. And so this is actually a strategy by the CBN in order to attract foreign portfolio managers. But then I don't think this will last for too long because, of course, DMO will be wary of the cost of repayment. And so we're going to be seeing a decline in yield with this auction, where between now to the end of the second and then probably middle of the third quarter, we will see decline in yield. So the result itself, in terms of the rate hike, is evident for everyone to see. We've seen inflows by FPI within the last 5 months, move from between 3 billion to over 15 billion, and that has actually impacted the FX in terms of appreciation.
All right, we'll definitely keep tracking that market to see how attractive those yields look going forward. Thank you so much for coming on, Mr. Chuka Nwachukwu, Group Head, Balance Sheet Management, UBA. Thank you so much.
Thank you very much.
All right, that's it from me on Business Morning. Markets are open now. We'll give you a summary of closing numbers later today. I'm Ladi Williams. Bye for now.